Hey Matt, how are you?
I'm good, thank you. How are you, Ralph?
I'm very good, man. I'm very good. Thank you for taking the time. So this is a series of videos we are doing with our users. The idea is to understand how they use MyFractal Range into their system. I mean, most of our customers are already active traders, but yeah, we want to show maybe the different kind of users that we have. It's also a good way to connect. I mean, to know you and your background, and maybe to explain the specifics of what you are looking at when you use MyFractal Range, and to maybe share the way you use it with new users or maybe less experienced users. So could you begin by introducing yourself?
Yep, my name is Matt Connie. I live in Boulder, Colorado in the United States. Have lived here most of my life, spent some time in Chicago as well, actually working as a technical analyst. My background is in finance. I have a degree in finance, which really doesn't matter anymore these days. But it was in specifically in finance, futures and options. I began by working for the NASD, which was the regulatory body for NASDAQ back when they existed, which they don't anymore. Basically busting up what were called chop shops, penny stockbrokers, which were huge here in the Denver area. So I put a few of those out of business, which was nice because they were robbing old people of their money. And I spent 4 years there learning the regulatory side of the markets, and then moved on to get my licenses, Series 7, Series 24, Series 63, and opened my own branch of a retail, and basically managing family money. I also got involved with technical analysis, where which now is considered old school apparently.
Yes.
Where I learned on my own, self-taught, basically the technical analysis of the futures markets as well as stock markets. Started trading commodities and futures. My biggest issue with myself was I didn't have a process. I was kind of winging it, and winging it caused me to lose a home, a car. Fortunately, was not married, because I would have lost a wife at the same time. And then kept going, moved to Chicago, and then got a job with a financial firm here in Boulder, where they kind of pushed me towards the web development, web design, and database development side. So I did that for a good 10 years before I came back. Coming back, basically what brought me in was a firm that offered a number of different processes, including macro, some I guess fractal analysis, and that's where I hooked up with you, because I watched your interview on that channel, and then we basically went back and forth, and you started this MyFractal Range, and I basically became involved with that, and I do use it daily in my trading and analysis.
Okay, it's very good. It's very good introduction. And so, how do you use it exactly? I mean, what does
Yep.
your day look like in terms of handling your money on the financial market, and
Yep.
how do you plug MFR into this?
Yeah. So my risk management is very specific in terms of I utilize basically, depending on what type of investment it is, I utilize a specific percentage of my allocated capital for each trade. Fixed income, because it's less volatile, I allocate more. Same with FX, and I take that and apply what I would say is a beta adjustment to all of my trades. So this is just the macro coming in. I also then, what I focus on are the specific, like ETFs that are in these sector specific areas. So I use MyFractal Range. Within that, I have a number of ETFs that I follow, depending on what my macro view is and whether I'm long or short. And I download on my Fractal range, I download the CSV files, the Excel files, and apply an analysis where I take whether I'm bullish or bearish on it, and which my Fractal range provides that information. I take that information in my spreadsheet and I apply ratios to whether or not I want to enter or exit a position. So I use my own ratios. I know you provide the ratios too, but mine are real time. So my real-time ratios come from Interactive Brokers, where I have a live quote coming in, and that ratio is adjusted real time. And I will then sort my spreadsheet every 10 minutes. I wish I could do it automatically. I'm sure I could develop a macro for that. And I go in, and generally speaking, I trade half an hour into the open, and then I will trade in not the last hour, but the second to last half hour of the market close for New York time.
Okay.
And I will look at my ratios and adjust my positions accordingly. And usually by 25 to 50 basis points with each trade, sometimes a lot larger if I see that ratio is way out of whack. I will take my Fractal range, do a real-time adjustment of the range if I'm really seeing something moving, or a ratio that's just super high or low, and apply it accordingly. So basically I use it within the day, at the end of the day, number one, because I will go at the end of the day when you do your real time or your updates at the end of the day. And at night, I will say, well, look, these are the things that I'm going to look at trading tomorrow based on the ratio being high or low. If it's a ratio, like I think you've mentioned, you like a ratio that's 2.0 and above for your long entries.
Exactly.
I also adjust the ones that are bearish on the trend side. I do a reverse ratio on that. So if it's two or above, then I will enter a short position.
Wow.
So effectively, that's kind of how I'm managing using the tool.
Okay. You mean for the short side, you mean if you reverse considering it's near to zero, right?
Exactly. Yeah.
Okay.
Because the ratio on the other side is not going to help me with the reverse unless I'm looking at something that's like 0.25 or 0.3.
Of course.
So I adjust it on the reverse side if it's a bearish trend. I have a formula in my Excel spreadsheet that does that. So fairly simple.
A user have asked us to make it negative, but the problem is we would have a gap from 0 to 1. You know, I mean.
It makes more sense to just do it on your own, I think, because it's fairly easy just to create a formula in the spreadsheet that does that.
So you have a very deep process. I mean, I can see that you already had your process before. It was already working, but this way it's just complementary on this. You can add a lot of edge compared to what you are doing before.
Absolutely, yeah, and it helps me. The way it helps me more than anything is when I have a list of tickers on the long side and the short side, is it helps me develop a strategy that gives me some alpha in my portfolio. So I'm adding to the shorts when things are at the high end of their ranges and are bearish, and then I will reduce those as they move, and then start adding to my longs that are on the opposite side. And so it creates this kind of teeter-totter of alpha, which is a nice, and it's something I didn't have before in my strategy, which is and I'm not having days that are out of control anymore because of this. So that's the best part.
Yeah, it's a risk management. I mean, this is a this is a thing with for example, beginners, they have an idea, you know, they put all the money inside it because maybe it's bullish and high, and we are near the bottom of the fractal range.
Yeah.
And the problem is, first of all, the range is moved. The range is moved. The trend can move. Intraday, it can have you can have a shock because you have a news or something. So you have to have a construction of portfolio which is very well thought, and and yeah, I mean, our tool, I think, match perfectly with people who are conscious about the way they manage their money. They don't,
absolutely.
They're not risk takers. You just do calculated risk.
Yeah, and the calculation of risk also, like I say, is a certain percentage that I'm allocating, but as well beta adjusting. And my beta adjustment is a live. It's my own adjustment, but it seems to work. As I take the implied volatility of an individual security and compare it to the S&P, which is the benchmark, and that tells me what percentage I'm going to put into a certain position. And then I trickle in based on whether I feel confident, 50 basis points, or if I'm feeling a little bit like this isn't looking 100% good, then I'll go 25 basis points or less.
To go more into this risk management aspect, we are thinking about providing a tool for calculation of the risk. Like basically, it will calculate according to trend, to the distance of the price in relation to the ranges, etc. You can input the size of your position, and it will tell you, okay, what's the risk you are taking compared to the benefit you can have. But we didn't think about the beta adjustment. This is actually a very, very good idea. In relation
and like I say, my beta adjustment is from Interactive Brokers, because they offer the implied, well, everybody offers implied volatility, and how that's calculated is a different story. But Interactive Brokers uses uses a put and call for their adjustment, which put would be much better. But I find it a very, very, very valuable tool. I think that would be a great addition, because, for instance, there's a couple of securities that I've traded in the past. I'm not in now, but like Playboy is a prime example. And that thing, its beta is so high that if you're actually trading a full position without adjusting for beta, you're going to get whacked.
Yeah.
So I and it kept me small, but at the same time, with big moves, it still keeps your profit and loss level, instead of getting hit super hard and having a big drawdown. So I think that would be valuable if you were to add that to your tool.
Yeah, one note for the people watching is it would be easier if we were doing for ourselves. The problem is we need to buy data that is for commercial use. So it's much more expensive, and it's very limited. So that's why sometimes it takes time, maybe some tickers, they don't work, some others, they work, but it makes no sense what this way is available, this way is not available for real time, for instance, just because the data is like this. And it would be much easier to go to something free and not pay anybody and use the data, but this is illegal, guys. So
but there's a provider. If you want to utilize historic data, I would, and part of my past in technical analysis is using just a average true range over a specific period, like a 20-day period or 15-day period, and you can apply that average true range as a percent of the last price to what the S&P's average true range to a percent of its last price is, and you can apply that ratio for a generalized data. It's going to be backward looking, but at least it's better than just saying, hey, I'm just going to throw $2,000 into this trade and not worry about beta. I think beta is a very important concept, and it would be a good tool. And something like that is free. It's a technical tool. So at least that's free, but it's backward looking. So you're not getting forward looking information.
Yeah. Listen to that, guys. I mean, especially when you get out of the period we have encountered from October to maybe, let's say, February, where everything you were buying, even the shitty oil companies, I mean, I never checked any of their balance sheet. I was just buying and buying all of them, and it was just going up. But at some point, it doesn't work, because people, they will move to more quality stuff, and they will just dump everything that is with high volatility. And like you said, on some names, if you have a too big position, it's not beta adjusted, you can wipe out your account. I mean, it's
you're gonna get wiped out. And that was I think it was David Portnoy had a philosophy of grabbing Scrabble tiles and just getting 4 tiles, and whatever that was, you buy the ticker.
So, I remember it was working.
So that works when we're in that situation where everything works. It's the dartboard theory. But in this case, you have to be more specific and really fine tune your strategy to what the macro picture is, which I utilize Darius Dale's macro analysis, as well as a few other services. But he and Real Vision and are specifically what I look at for my macro tools. And so you start from the ground up with the macro, and then you then specify like, well, what works in this macro environment on a sector style basis, and then individual tickers from that within those sectors. And that's where my fractal range really helps, because you can get the ETF and then peel the ETF apart and find individual pieces that are working or not working. And that's where it's really valuable.
Yeah, I can take the example of, for example, crypto. I mean, if you listen to the crypto people, you should buy crypto every day. If you listen to the anti-crypto guy, crypto is just a scam. You should never buy it. So that's why we also pushed forward the release of the crypto, is because we were seeing stuff saying, okay, maybe the bear market, let's call it, that we had experienced in crypto is over. And maybe this is the time to get back in. And here we go. I mean, it's been like 3 weeks. It's crazy. I mean, I don't know now because it's just done 1 point.
Yeah, I actually went into almost a full position in Ethereum because the signs were right, and I am now sitting at 1%. I think 100 basis points in Ethereum. And I'm still seeing it go up and up and up and up. And I'm like, well, when is this thing going to give me another chance to get back in? But that's the nice thing about the tool, is you can still have a small position and just wait, and then start adding massively when things come back to earth.
Exactly. So you can use the ratio to check, what's the risk I'm taking, the profit possible I can do. And like I was mentioning, you have mentioned several names of research firms. I mean, so we don't do research. What we offer is for people who are maybe subscribers of other services, and maybe sometimes they can be wrong. I mean, I hope they are right most of the time, but this way you are sure. I mean, you just input the ticker, and you have a look. I mean, the research team behind the research may be right, may be wrong. You don't know. You just put it there. Okay, he seems to be right for now. I'm gonna put some money in. So
but the best part is there's no emotion attached to what my fractal range offers. Is it's data driven, and that takes the emotional part out. Is it's a signal, and that's all you need to pay attention to. You don't need to think about like, oh gosh, I'm feeling this. It's telling you right there. The ratio is 3.0, 3.5. That's a tasty ratio, and I'm going to go ahead and start adding to that position. Or on the opposite side, I'm going to take away because it looks like this thing is starting to peter out, and I need to take money off the table.
So continuing on this, what would you recommend to the people who maybe they just arrive on the platform, and I mean they are like they are smart people, they understand all this. So what should they put their focus on? Mainly the ratios, the trend. How would you tell them to use the tool the best way possible so that they don't get whacked, like you mentioned before?
I think initially the primary focus, and you've mentioned this to me in many a message, is always focus on the trend. And there's an old analogy in finance: the trend is your friend. Well, that's a fact. I mean, don't bet against the market. I lost a lot of money in the past by thinking that I was picking the bottom or picking the top. And it's better to pick the middle of any trend and not worry about the bottom or the top. And so you look at the trend first, and also the 30-day, like you mentioned, because the 30-day signal can be a warning sign that things may be changing. So I'm always looking at the trend. I will oftentimes still enter a trade on the neutral side, because a neutral trend can mean that something is simply going in a chop. In other words, you can buy the bottom and sell the top, and
like gold right now.
Yeah, exactly. Gold is a prime example of that. And disclaimer, I'm long gold. But so utilizing the trend is my number one step. And then from there, I constructed a number of different watch lists. I have a fixed income watch list with a number of ETFs in them. I have a commodities watch list, or my CRB, as I call it, watch list, with a number of commodity tickers in them. These are all equities. I'm not trading futures or commodities right now. That may be in the future, but it's a risky venture.
Okay.
I learned that the hard way. I have an ETF watch list, and I have, like I say, fixed income, foreign exchange. I follow the tickers for the basic FX products. And then I have my largest one is individual equities, and those I will take from the ETF that I'm watching and pull out either the top 3 or 5 within that ETF in terms of the holdings.
Yes.
And so that's how I use the tool, and how everyone's going to have a different strategy, a different philosophy, but this helps me in terms of an organizational standpoint from being organized. So I take it from the top down, basically, again. So I will look at my ETF, and let's say I feel that XLE, the ETF, I am currently short that because it's a bearish trend. Then I will take tickers from within that and say, well, I can also make money off of these tickers and apply that to my positioning and method of trading.
It's very good. It's exactly it's the right way. I mean, in all the interviews I've done with users, I mean, I'm amazed how they are able to internalize the process we are giving to them and combining it with their own. I mean, it's very, very good. I mean,
and each individual is going to have a different strategy. That's all there is to it. You should have a different strategy. You should not be following what other people are doing unless it makes you comfortable. And it's all a matter of it. In the end of the day, is feeling like no anxiety about your strategy, feeling that you're in play. It's in place and it's making you money. It's generating profits and not wiping your account out. That's the key. My Visa bill is what wipes my account out.
Yes, that's for sure. So yeah, it's very good. And yeah, for instance, I mean, for example, you've mentioned the beta adjustment. I haven't thought about doing this for the tool, so it's one thing maybe. One thing we will talk about with the team. Any other stuff that you maybe
you've got the technological background within your team there to just do a simple beta adjustment and just have a disclaimer that this is historic, it's backward looking, but here's a baseline that you can at least look at, and we recommend you go out and get your own tool in terms of implied volatility adjustments as far as forward looking goes. And you could also use a implied vol, realized vol, discount or premium to apply to that as well in terms of adjusting the beta or the size of your trade. Because if you have a large, right now the premiums they don't even tell you anything as far as I'm concerned. They're so out of whack, it's not even funny. But you can also utilize that type of tool within your own strategy to beta adjust and risk adjust.
Yeah, regarding the IVOR premium discount, one of the data provider we use is supposed to launch a new product for this, so we are waiting. If they open this product, our company will subscribe to it for the commercial use, and we will add this information to each ticker. So this way you will know this. And regarding the beta adjustment, I think what we could do is we come up with a calculation and we just put it as an option you can use in settings. Do you want to adjust or you don't want to adjust? And this way it could be more suitable for the people.
That would be a fantastic addition to the tool. Absolutely.
Any other improvement you would recommend us to do? Something that you think, okay, this is missing, and I would need it to improve. I mean.
Yeah, no, right now I feel like you guys, number one, you're getting a lot of input from a lot of people that's very valuable, and I feel like when it's something you see that's valuable, you are on it as quick as you can to add to the tool. And I think you've done a great job of adjusting the site, the tool. I know it's work in progress. Every day is work in progress. And that's the same for my trading is every day is a new day that is work in progress. And I'm always writing myself a note like, you made a mistake. Let's not do that again. Or you did really well with this trade. Do that again. I think it's the same thing with your tool, is that you're constantly adding things that are of great value. And a prime example of what I saw as great value is the ability to download my quotes. I think I think it was Leslie mentioned that it would be nice to be able to download your entire portfolio of quotes. And that I would say would be a great addition, because what I have to do is I go into each of my watch lists and I download that watch list.
Yes.
So I would like to have something, and I know it might be a data load, because your watch lists only load if somebody clicks on the watch list. But that would be a valuable addition, I think, because that's my daily strategy. Is at the end of the day, I think it's maybe 9 o'clock, 10 o'clock Eastern. I'm on Mountain Time, so I'm 2 hours before. I go in and I download that data into my spreadsheet. I load my Interactive Brokers API up, where all the data is streaming live, and I sort my tickers and make a list of the tickers that I'm going to focus on the next morning.
Yeah, I've mentioned this with our tech partner, and I think we're gonna create a tab, active tickers. Instead of being in the settings, we're gonna move it to on the left side, so you will see the whole list of active tickers you now have, with maybe where it is in, I mean, in which watch list is
which watch list, yeah.
And this way you can download the whole portfolio, the whole active tickers in one shot.
Yeah, that would be fantastic. Yeah, that would be a great addition. That's the only thing I can think of that as far as my I mean, the other thing would be to give me 3,000 free tickers, but I know that's not possible right now.
Yeah.
I think I told you once I would trade you 2 chickens for some free tickers. So yeah, we'll work on that deal.
I think you also told me you want unlimited number of tickers.
Oh yeah, well that would be nice too. Yeah, I'm a fan of unlimited.
Yeah, that would be
free is good in a socialized world. Yeah.
Yeah, maybe we go to a product like this in the future, but that would be I mean, can you imagine infinite number of tickers to load? I mean, some guys would just input like the whole S&P, the whole number.
Yeah, that would blow you out pretty fast.
Yeah. Can you imagine? We had some issue with the server going down in the past. So now not happening anymore. But if you put this kind of thing into the hands of some users, they're gonna just explode your server.
Yeah, that's called from the bad ideas department. Yeah.
Exactly.
Yeah.
Okay, Matt, that was pretty cool. I mean, you give some great insight, and yeah, I encourage the other users to discover what everybody is doing. I mean, each of us have a different strategy, but this tool can fit in your own strategy. At least you get some confidence in what you are doing, and you are not relying on the research of some guy pushing it on the TV or something. And because this guy has no interest, maybe he has actually a contrary interest to you, to push the ticker. So just
I the way I look at that is it's the Wizard of Oz, the man behind the black curtain, without actually offering you an explanation as to why things are being signaled. You actually have the signal in front of you, and that's what matters. I also like to point to a very important thing is to actually do your own research in terms of learning. Read as many books as you can. And Vi turned me onto this one, The Alpha Trader. Fantastic book. I think that's backwards now because my camera is not doing it. But just any book you can get on that comes recommended, obviously, because there's some trash books out there on finance and whatnot. But technical analysis, if that's your thing, just read as many books as you can, and then use this tool to apply what you're learning as well, and that'll help you immensely.
Thanks a lot, man. That was great. Vi will be happy that you are recommending the book he recommended.
It's a good book. I just started on it. I've got about 20 books that I'm about 2 pages in on each one. It's time. Time is a scarcity. Yeah, especially having a kid.
Oh my God. Yeah, I have same. I have like 20 books. Now they are just a shelf.
I have a stack. Yes.
It's a stack. So maybe in another life.
Yeah, right.
Thanks a lot, Matt. Thank you for sharing. And again, I encourage people to learn. We will have several videos like this with our users, and you can discover maybe how to improve your strategy using our tool.
Yeah, thank you. Thank you, Ralph.
Thanks a lot, man.
All right, have a good day.
You too.